I think first up we have the veteran CEO who's been with the company 6 months, which is Matt Jones, and he's with Adam Moloney, who you may know from his AIM career previously.
Great, thank you.
Here you go, Matt.
Okay. So let me just start with a little background. I joined Blanco as CEO 6 months ago. I'm from and live in Palo Alto the last 20 years. I've been running private equity-backed software companies in the Silicon Valley. I've been lucky enough to sell the last three. The most recent one right before I joined Blanco was sold to VMware. I also sold a cybersecurity company to SAIC, a big federal systems integrator, and sold a storage software company to EMC. So very familiar with software companies. I saw the opportunity at Blanco, I think both from its product and its customers, and became very interested. So I'm going to let Adam do a quick introduction, then we can jump into the presentation.
Evening, everybody. As Andy said, I spent the bulk of my career working for AIM-listed technology company Echo PLC that some of you may or may not know. So Echo specialised in payment security and speech recognition. Echo, I was there from 2003 right through till 2017, and in the last 9 years we delivered double-digit organic growth every single year, and during that period the market cap went from 10 million to 120 million. So a lot of growth, so not quite as many companies as Matt, but delivered some good shareholder value at the one I was at, and looking forward to bringing that experience to Blanco.
So we just announced our full year earnings on Tuesday, and the presentation in front of you excuse me, is really geared towards our biggest investors who we've been seeing all this week. It's geared for an hour, and clearly we don't have an hour. So I'm going to skip through a bunch of these slides and kind of not go in order and really focus on the market and opportunity. We'll probably come back to the beginning of the presentation, which is our actually earnings announcement if we have time, but I think it's more important for you to see kind of looking forward than looking back. So let me just kind of get to these slides and explain what we do a little bit. So our main technology is really data erasure, data sanitization as Gartner calls it. And so it's ability to permanently erase data off any device or any medium. So whether it's in a big data center, whether it's on your cell phone, whether it's on an iPad, that's really the technology that we have, and Gartner describes it as such. I think the more interesting way Gartner looks at the market is every year, and this will be hard to see from the back of the room, is they put together and look at about 50 or 60 technologies and put them on what they call their hype curve. And where you are on the hype curve determines how aware the market is, when it will break out, what are the growth factors in that. And I think they've done a good job of putting data sanitization kind of right at the beginning of what they'd call their growth curve, where they think it'll hit mainstream adoption in the next 4 to 5 years. If they had seen us 2 years ago, we'd been way up in the hype, what they call the peak of inflated expectations. And I think we're past that now, and as we see, there's lots of things happening in the market where it's regulatory changes, GDPR, security issues that are all making people much more aware of how you need to think about data sanitization and what you need to do with it. So we really call on three markets. The first market we focus on is the mobile market. And the mobile market is really not one customer set, it's really three customer sets. So we call on big carriers like, for example, AT&T is a big customer of ours. We call on retailer and buyback, and we call on third-party logistics companies, because all those players in this ecosystem touch phones that come back into the ecosystem. I'll show you the size in a minute, but millions and millions of phones get brought back in this ecosystem. They use our technology to wipe them clean so they can be resold. They use our technology to diagnose them, to make sure that they understand what's happening in this phone, and then it gets resold back into the marketplace. So we think about the size of this marketplace. Right now, last year, about 165 million phones got brought back in, and mostly out of developing countries like the U.S. or Europe or Japan, and resold back in the marketplace. That market's going to grow about double in the next 5 years to almost 300 million phones. The other thing is the value of these phones. Because phones are getting so expensive, even at a wholesale level, the value of these phones is going to be over $50 billion. So everybody in that ecosystem I just talked about wants to make sure that this phone can be diagnosed and erased and sold back, and we help as part of that, a part of that ecosystem. And clearly, one of the great growth opportunities for us is in the mobile market. The other market we call on is what we call an IT asset disposition. I'll talk about that in a little bit, but I'd really rather focus on the enterprise market. It's really a second growth market for us. So if you think about the mobile phone and what I just talked about, the mobile market, they track devices. So they care about the individual device that each goes through the system. When you reach back out to the enterprise, which is the other major market we're in, they really care about their data. So if you talk to a corporate CIO or corporate CTO, they don't care on what device the data's on. They care about managing their data through its life cycle. And so as you think about this is the life cycle they go through. And so when you think about and talk about the corporate market, or you try to size the corporate market, you have to think about how much data that they have to manage, because they really understand that now they've saved all this data, but somehow there's a security issue, there's a compliance issue they need to manage. So when we think about size in this market, we think about the amount of market that's created. And so what you see is any way you look at this market, whether it's the amount of data in a data center, which is our foothold into the enterprise market, or the amount of data that's stored on devices, or the amount of data that's created, it's just growing exponentially. And all that data has to be managed through that life cycle. So as we talk to enterprise customers, they have a real issue on how they manage this life cycle, and clearly erasing that data is part of the life cycle that we help them manage. So when we think about our strategy going forward, really it's about focusing on these three markets. If Andy mentioned, if you'd seen this presentation 2 or 3 years ago from maybe some of the other leadership, they had a very broad view of the market, that we should be in automobiles, and we should be in IoT, and we should be in all these other things. We've taken a very focused approach as I've come on to say, here's 3 marketplaces: the enterprise, the mobile, and the IT asset disposition. Those are markets that all have incredible growth. Those are markets where we have products, and those are markets we can solve and service today. Clearly in the ITAD market, it's a market we've been in for a long time. This company was founded in 1999 out of Finland. We have the predominant market share in that marketplace, an important market for us. But ultimately our long-term strategy is based on our growth. We have thousands of customers today. We have a worldwide footprint. We do business in 15 countries. And we see there's real interesting synergies between these markets from a technology perspective that we can attack. And so we feel like we're very well positioned to take advantage of all this growth that's in the marketplace. So let me talk about each market individually quickly and think about how we're going to attack these markets. The mobile market's a very large, high-growing market, but it's very diverse from a competitive standpoint. It's the most competitive market for us. There's several companies like us, and we really believe to create this leadership position, what you need to do is make sure that you can service all the different aspects of that ecosystem equally. Make sure that a carrier can use our technology, can also be used in the third-party logistics. It also can be used, for example, in the retail space. For example, we just re-signed AT&T to a very large contract that included not only the retail space, but their warehouse space, because we can share data between those two markets in a way that's very unique for us. So I think we're very well positioned here, but there's still development we need to do. And if we get to time to talk about financials, some of the investment we'll make is some of this development that I think will be very innovative for us and really differentiate us. In the enterprise space, probably the largest market and probably the least competitive for us. We're a clear leader in this. I think our biggest potential competitors are the individual OEMs like a Dell or an EMC, but interesting enough, we're in positions to talk with them right now about integrating our erasure software into their space. So if you think about us 2 or 3 years from now, I think what you'll see is us integrating this technology both from a technology perspective but also go-to-market perspective, so that when somebody does erasure in a data center or does it on an individual PC, we'll have that built in. And we have some very interesting technologies and interesting discussions with all the big players going forward. And our really focus right now is the data center, and so we have real places we can work with the data center today, and I won't go through the different use cases you see here, but we erase data at the end of life, and so when something wants to be decommissioned, they use our technology to erase that, but we can also erase it in what we call in a live environment. So anytime enterprises move from their own data center to the cloud, from one cloud provider to another, those are all times when you need to erase data, but you want to reuse that equipment, and we have the technology that's patented to do that. The last market we've talked about is kind of the ITAD market. And the ITAD market, again, is a market space for us. We see more of a cash cow. It's something we have very good footprint in, that's interesting to us, but it's a slow growth market. So it's something we're not going to invest in, but make sure we keep our leadership position to make sure we can continue to grow and see growth. So the last thing I will talk about, and then I thought I'll hand over to Adam to talk about the financials a little bit, is you'll see an evolution of what's going on in our go-to-market. So we've been a very much direct company. We've sold directly. We probably do about 80% of our sales direct, about 20% to channels. Over the next few years, that'll change dramatically, especially in the enterprise space. I think you'll see it go to an all-channel model. It allows us to really take advantage of the partnerships we're going to build. And from that perspective, where this is mostly direct today, other than calling on big carriers and big third-party logistics companies, what you'll see is this evolution to a channel model that allows us to be very effective at getting to thousands of customers in the enterprise as well as the ITAD market. So I think it's a strategy that's interesting. It's built on our strengths today. With focus really comes growth for us. And with that growth, I think you can see us become leaders in all three markets. So I'll jump back to you and talk about the financials.
Just going to skip back. Okay, so we released our results on Tuesday. I think I probably should give you the overview. First of all, Matt and I are both fairly new to the business. Matt's 6 months, I'm 2 months into the role, and the reason that we've both been appointed is there was some discontent from our board with the way that the business was being led in the past, and so there's been a big change amongst the management, which has led to, perhaps on the face of it, not huge progression in terms of the income statement over the past year. So we did see revenue growth of 2%, which was 5% on a constant currency basis. And we saw profit grow a little bit, adjusted operating profit from 3.2 to 3.3. EBITDA went from 5 million to 5.9 million. But that's against a background of a changing management team. So through most of that period, there wasn't an executive team in place. We had an interim CEO and CFO who were looking after the business until Matt and I could join the company. So for us, it's all about how we can push things on from here. To give you a little bit of a drill down into the revenues, we're split really about a third into the three markets that Matt talked about. So 9 million in mobile, 9 million in enterprise, 9 million in ITAD. And similarly, there's a similar split in the geographical splits of the revenues as well. Our biggest is Europe, where we do around 10 million, followed by North America, which is around 9, and then the rest of the world, Asia mainly, around 8. So very geographically spread, and it's quite well spread through our markets as well. The interim CEO and CFO that was in place before we came on undertook a restructuring of the cost base, and so we saw a big uplift in profit in the second half of the year. So around 2 million of cost was taken out of the business, and we saw that adjusted operating profit of 3.3 million. 2.5 million of that came in the second half of the year. So building blocks have been put in place for us to push the business forward, and hopefully take the share price forward. The share price has taken a bit of a hit over the past year or two, and I think it's now at a position where we can push that forward again. From a balance sheet perspective, the business has a debt facility with HSBC of just under £13 million. We have drawn down 2.7 million on that at the end of last year, but we are generating cash. We're profitable. We don't expect to be eating into that, and we're going to be pushing on making some investments in the business to fund future growth. So for us, we could continue to run the business as it currently is and grow by maybe 5% a year, but we don't think that's interesting enough as an investment. We want to push this business on to be doing 15 to 20% revenue growth every single year. And so we're going to be making some investments in R&D to fill some technical product gaps that we have, and also in marketing, where perhaps the marketing spend was tightened up a little bit when the restructuring took place. And from a cash flow perspective, you can see here we talk about our adjusted operating profit of 3.3 million. The cash flow from that was 4.1 million, so 123% coverage of our operating profit. So that's really an overview of the financials. I don't know if you want to come back and just do the summary.
Yeah, I'll just do the summary. Let me drop. So sorry for jumping around, but let me just kind of summarize where we are. I think the nice thing is the interim CFO and CEO, I think, really stabilized the company. It went through, I think, a year of transition, and I think now we have kind of the right team in place and the right opportunity to grow. I think we've identified the three key markets that are important to us and places we already have a nice footprint and can grow upon. And I think we're really building this on the strengths we have. So if you heard the strategy, it might have been more grandiose but less focused in the past. I think now it's much more focused and much more operationally focused to see what we've done. I would say the only thing is just from an outlook perspective, we've just finished our first quarter. We're very optimistic about what we're seeing in the marketplace. All three geographic regions that Adam talked about are significantly ahead of growth from last year. All three product lines, mobile, ITAD, and enterprise, are firing on all cylinders. We've seen continued cash generation even in Q1 when we didn't expect that, so our net debt continues to go down. So I think we're seeing real momentum that got built off of the last 6 months continue into 18, which makes us and allows us to kind of invest back in the business where we need to in R&D and sales and marketing to kind of grow this forward, because it really is a growth stock. It really is a growth opportunity. It takes some investment to do there, but we're well positioned from our financial perspective and the market perspective to do that. So I'll stop there and we'll take questions.
Carry on.
Success of those technologies. Where do you sit in the thought quadrants?
Yeah, they don't do a magic quadrant, unfortunately, on this. So I don't think the market's, usually the market, I've worked with Gartner a lot in the past, has to be $1 billion plus market. I don't think they see that market this big yet. So they don't have a magic quadrant we can look at and see where you are in those different quadrants. It just doesn't exist, unfortunately. Yeah. So we do have a patent portfolio. I think it's pretty significant and continued to grow. I think also we have 20 plus years of expertise in this. And so if you talk to an IBM, which is a customer of ours, you talk to a EMC or an HP, which are customers of ours, this isn't their core expertise. I mean, always coming from the startup world in Silicon Valley, big customers can always build things. They have huge enterprises, but this is, to me, more on a piece of a solution that we can include in their broader solution. So could they build this? Absolutely. Would it take them a long time? 20 years in erasure for us. The other thing we have is a broad set of certifications that are very important in the enterprise market. I think we're certified with 20 different certifying bodies, U.S. government, U.K. government, NIST. You go down the list, and for an enterprise perspective, it's very important that we do that. So could they build it? Yes. Do they have an interest to? I think it's easy for them to partner with us, and that's our intent and kind of from a strategy perspective. Yeah, it depends. Like, so in the data center, there's real needs today, and so I mean, the customers we call on, and I don't think we showed this. The biggest cloud provider in the world is a customer of ours and bought this year. The biggest software company in the world is a customer of ours. The biggest SaaS-based company in the world is a partner or is a customer of ours. So there's real needs for this, and they pay significant money for this. But when you get the broader enterprise, I think it's part of a bigger solution in the data life cycle, and we'll just be a piece of that. So that is an accurate statement.
Getting it off, do you have to go down to the actual bottom level of code around the chip?
You absolutely do, and then you have to rewrite right over whatever's storing that data. Usually it's a storage device, it's not a chip level. Usually it's on a solid state drive or something. It's getting down that level and writing right over it. So the only other technology that's equally as effective at getting rid of data is destruction. You want to shred it, that works just as well as what we do. But from any other perspective, it's a total rewrite right over the data. Yeah, a couple perspectives. One is it's not cost effective. We're much more cost effective than shredding it, because most even if you have those chips, you can resell that once you get rid of it. So there's money you can make by putting that back in. It's not green as well either. From a perspective, a lot of enterprises don't want to shred it, and that means they have to have their own shredder. And so one of the alternatives are shred it, use ours, or use an IT asset disposition player to do that for you, and those are all our customers. So I think that's really the alternatives you have. And I think in every case we can show an economic benefit to doing it versus shredding it. Well, first, our clients aren't, we're really spread out as international, as Adam said. We're a third Europe, a third North America, and a third in Asia. but it really is from a historical perspective. We were part of a bigger company that was hardware and software, and we got spun out 2 or 3 years ago. They were an AIM-listed company called Regenesis. Regenesis, when they took the hardware piece out, we were the portion that was left over about 3 years ago. So. Yeah. So I think it depends on the marketplace. In the enterprise, we don't have any significant competitors other than an OEM like a Dell that would do it themselves, but there's nobody within, even would have 10% of the revenue we would in the enterprise. In the mobile space, very competitive. And so there would be 8 or 10 players in that, 2 or 3 that are about our size. There's a company called FutureDial, there's a company called Provasio, there's a bunch of small companies, one UK-based called Black Belt, Enhanced Technology out of Dublin. Lots of players in that space. And in fact, longer term, we think that there'll be probably some roll-ups, and there's interesting opportunities for us to think about should you build or buy the technologies that we don't have. And I think it's a very fragmented market, and usually in fragmented markets at some point you don't have 8 or 10 competitors. Something happens with consolidation. I think we have to keep our eye on if we want to be a consolidator. Well, the good thing is, I guess you always have to be worried about that. I think, for example, that's why I go through all these certification bodies to make sure we just don't believe it, that people like the NSA in the United States believes it, right? Or the UK government believes it, or NIST believes it. So I think we try to use third-party certifications who would test that out to make sure that there isn't some way you can get around that. I think one of the things, again, one of the technologies some companies use that I think will ultimately become obsolete is some people encrypt. Encryption is very interesting, and we can erase on encryption. But I don't know if you just saw the Australian government came out and said to protect their citizens, they're going to make sure they can break any encryption that's available. So at the end, I don't think encryption is the right way to protect data, because at some point it's going to be broken, whether it's quantum computing or something else. So I think we have less risk than other technologies, again, other than destruction, which is clearly works. Again, I think one of the things we've had a history of is making sure that our technology is certified from every perspective. And when we go into large companies, it's absolutely critical that you can say, we've had this tested, we've had this certified, this certification proves that it works. And so it's probably less important right now in the mobile space, but clearly in any enterprise space, it's hard to sell any Fortune 500 or Fortune 1000 customer that doesn't want to prove that you've gone through these different bodies, whether that's NIST in the United States or whatever the counterpart is in Europe or Asia, to prove that this has been tested and fully functional. And something we have certifications, I think, in 19 different certification bodies, and we're the only one, because it's expensive to do, to make sure that we do that's possible. Yeah, so it's an evolution for us. Most of it's direct today, but I think as you see, what you do is, as you embed your technology, the channels have a lot of, there's not a single channel, right? It could be a simple channel like Arrow or Ingram Micro, who have signed distribution agreements who we have relationships with, and so it's them expanding their service into the data center. It could be people like professional services like KPMG or Deloitte or Price Waterhouse. It could be OEMs like Dell and EMC. And so you just have to manage channels differently, but I think you can get commitments from them, and I think we can get it, not exclusive because that'd be the wrong thing, but we can integrate technology where we're the solution that automatically happens if you have a Dell piece of equipment that needs to be erased. We're going to be embedded in that. And so I think all those is this evolution that won't happen overnight from where we are today, which is mostly a direct model, to where we're going to go 2 or 3 years from now.
Given the investments you're making, where do you see the margin?
Yeah, sure. So at gross margin level, we're operating on very high software margins. So we are on 95, 96% level. We wouldn't expect that to change. At the operating level, I think the year we've just gone through, we're at 12%. We're expecting that to drop down a little bit this year. We'd expect to go down to about 9 or 10% this year, because we want to spend more on R&D, we want to spend more on marketing, we want to concentrate on revenue growth. But as that revenue growth begins to come through and we see the operating leverage come through, we think the operating margins will get up above where they currently are, more up towards the kind of 15% type levels.
Great. Well, thank you very much.
Thank you.
Very, very interesting.
Appreciate it.